Hi guys, Josh with Tharby here. Welcome back to my YouTube channel. In today's video, we're talking all about SPVs, what they are, how do you set them up, and some things that you need to be aware of when setting yours up. Before we get stuck in, please make sure you do hit that like button so YouTube knows that this is solid gold content and helps spread the word to loads of people. It really helps me out and I appreciate you guys doing it. So, what is an SPV? Fundamentally, an SPV is short for a special purpose vehicle, and what this means is it's a company or an entity. It could be an LLP, LLC. It doesn't have to just be a UK limited company, but quite often that's what it's referred to. So it's a special purpose vehicle, and it's a company set up for a single or special purpose. So as a property investor, it's quite often set up with the sole intention of buying and investing in UK real estate. Although it can be plenty of other things as well. So if you're in the kind of commercial business side, you might set up an SPV to facilitate an acquisition, a merger, or a business disposal. So if you've got a trading company, for instance, you want to sell part of the trade, you might do something called a hive down, which is where you put that into a subsidiary, or that subsidiary will also be an SPV to facilitate the sale of that company. So there's so many different ways in that SPVs can be used. But for most of you guys watching, you're all property investors, so it's going to be for buying and holding UK real estate to let out over the long term. So great, now we know what an SPV is, how do you go about setting one up? So a SPV is set up just as like a normal company on Companies House fundamentally. So you need shareholders, directors and articles of association which govern how the company is run and what its constitutions are. You need all of these documents when you set the company up. You can do it yourself. So if you just set up a basic limited company with yourself as a shareholder and director, there's nothing complicated about it yourself. You can do it on Companies House, costs about £12. However, if you're bringing in JV partners, or if you're bringing in other, even your wife, spouse, husband, civil partner, all that kind of stuff, if you're bringing them in, then you do need to look at an accountant getting involved just to see what tax benefits there might be of how you actually structure that limited company. For regular viewers of the channel, you know all about alphabet shares and how you can use them to pay less tax. So that's definitely something to look at, because getting that set up from day one is certainly beneficial, and it may save you thousands every year in income tax. But from a normal SPV, with yourself as a shareholder or director, you can do this yourself at Companies House. Okay, so when setting up your limited company, you'll be asked about SIC codes. I'm going to run through the main ones that apply to property. So first, we've got 68100, and this is buying and selling of own real estate. So you're only going to want to use this one if you're doing flips. So if you're buying properties to sell them on a profit in a short space of time, that's the SIC code you'd like to use. If you're doing long-term investment, buy-to-let, BRR, that kind of strategy, then you're going to want 68209, and this is where you'll 68209, which is letting and operating of owned or leased real estate, where you're buying it and your intention is to lease it or rent it out on the long term. That's the SIC code you want to use. Another SIC code you might want to use is 68320, which is all about management of real estate. So if you're an estate agent, you're doing service accommodation management, rent to rent, any of those strategies, that SIC code's likely more appropriate for you. So there are 3 SIC codes that you need to know about when setting up your company. Other pointers to bear in mind are that when you're setting it up, if you're doing it yourself, you want to keep your nominal value per share as low as possible. So when you set your company up, it's going to give you the option to enter a sterling amount here, and this is basically what your shares are worth when you set the company up per share. So if it's £1 per share and you've got 1 share, your total share capital is £1. But if you were to put this as, say, £1,000 per share, this means that for each share somebody subscribes to, so you essentially are subscribing to shares in your own company, you need to put that amount in. So if you buy 1 share at £1,000, you need to put £1,000 into the business. So for tax reasons, you want to keep this amount as low as possible, and also keep the quantity as low as realistically possible. We tend to say if you go for £1 per share and 10 shares, you won't go far wrong for the vast majority of people, but obviously it does depend on your circumstances. And this means you only need to put £10 into the company as share capital. Everything else that you put in can go in as a director's loan account, which allows you to charge interest and pull the cash out tax free. Whereas if you've got that money tied in as share capital, it's very difficult to pull the money back out. You need to go through capital reconstruction, potentially get high court approval, and it can be a very expensive exercise. So it's best to get this right from day one. When you've got your limited company set up, you're going to need a bank account. So you can do this at any of the online ones, Tide, Starling, Counting Up, Monzo, all of those ones. I recently did a video on this, running through some of my tips on getting a business bank account, but make sure you start this process as soon as possible if you are just looking to buy a property, because it may take a while and there could be some hoops to jump through and actually to get a bank account set up. I know for Starling they actually want accountant's letters as well, so you might need to engage an accountant as soon as possible so they can confirm what your business is doing. Again, JSM Partners, we can help with that. But these are just some pointers, and once you've got your first property, then definitely look to get on some accounting software so you can start keeping track of your records. That's all for today, guys. I really hope you enjoyed this video, and please do hit that subscribe button and that like button so that YouTube knows to show this video to as many people as possible. It really does help me out. Otherwise, that's all, guys. Thank you very much for watching.